Hi, and thank you for joining us for the first quarter market update. My name is Jason Gunkel, and I lead our investment team here at Severson Straight. The first quarter has certainly been an eventful one, with significant market movements, policy changes, and economic developments shaping the investment landscape. Stock returns for the year are negative, with the S&P 500 down about 3%, caused by a large market drop in the middle of February that saw the stock index drop 10% from peak to trough. International stocks, however, have performed much better than the US, with the MSCI EAFE stock index up nearly 11% year to date. Bonds have also performed relatively well and have provided stability in portfolios, with the Barclays Aggregate Bond Index up about 2% year to date. Please note that we are recording this about a week prior to the end of the quarter, so these numbers could change. A major development in recent weeks has been the renewed focus on tariffs, with the US imposing new trade barriers that have reignited tensions with key global partners. The impact of these trade wars has already been felt in the markets, contributing to increased volatility as investors assess their long-term consequences. Companies that rely on international supply chains are facing increased costs, which could ultimately be passed on to consumers. This raises concerns about inflationary pressures at a time when economic growth is already showing signs of slowing. Further retaliatory measures from other countries could reduce demand for US exports, putting more negative pressure on economic growth. Despite these risks, there are potential benefits for certain sectors, particularly those that could gain a competitive advantage due to trade barriers protecting domestic production. There's also the possibility that the tariffs will be rescinded soon after being used as leverage in trade negotiations. However, the uncertainty surrounding tariffs and trade remains a key challenge, and markets are likely to react sharply to any developments on this front. International stocks have been a bright spot this year, posting strong returns and demonstrating the value of maintaining a diversified portfolio. Many international economies, particularly in Europe and parts of Asia, have seen stronger than expected growth. In addition, a declining US dollar has benefited international stocks, as earnings generated in foreign currencies translate into higher returns when converted back into US dollars. Another key shift in the market has been the outperformance of value stocks over growth stocks. This is a reversal from recent years when growth stocks, particularly in the technology sector, have dominated the market. However, their rich valuations made them vulnerable to a pullback, and we are now seeing that play out as market conditions shift. Unlike the market sell-off in 2022, bonds have provided much better downside protection this time around. As concerns over economic growth have mounted, interest rates have fallen, leading to positive bond returns. This highlights the important role of bonds in a diversified portfolio, especially during periods of heightened volatility. Interest rates have dropped in response to concerns about an economic downturn, outweighing worries about inflation fueled by tariffs. This has provided a boost to bond returns, but it also puts the Federal Reserve in a difficult position. While some investors had hoped for rate cuts, the Fed remains cautious as inflation is still above their long-term target. The balance between sustaining economic growth and controlling inflation will be a critical factor for markets in the coming months. Looking ahead, one of the most important short-term drivers of the market will be first quarter earnings results. Expectations are high, and valuations remain elevated based on price to earnings ratios. If companies fail to meet these lofty expectations, we could see increased volatility. Strong earnings, however, could help justify current market levels and stabilize the stock market. Our investment team is closely monitoring these developments to help you stay on track toward your long-term goals. We appreciate your continued trust in us, and we will continue to analyze the market so that you can worry less. Thank you for watching, and we look forward to seeing you soon.